Hello there everyone, today's video is all about how to write a good business plan. So, a lot of the time, and I've seen hundreds of these over the years, people will write too much in their business plan. You've got to keep it concise. But also on the flip side, you don't just want to write 1 or 2 pages, it's getting the right balance. So I can assure you, you got a bank manager who gets a business plan this thick, he's just going to go straight in the bin. So listen, keep it simple, keep it concise. Ideally, no more than 6 pages, half a dozen pages, and half of that lot will be financials. So keep the verbiage to a minimum, only a few pages. You know, we don't want to be in the situation where we can't see the wood for the trees. Get to the point, keep it simple, address the audience, and hopefully you'll get the money that you seek, because that's why we're doing a business plan. Assuming we're not just doing it for ourselves or internally for our own business goals to get us to where we want to be. That's the budget, that's a forecast. A business plan in the context I'm talking about today is all about for raising money from a bank or from an investor, someone looking to put money into your business for whatever reason. If you're looking to increase your working capital, buy a competitor, employ more staff, whatever the reason is, you need to put together a business plan, and this is how you do it. So, the first thing is, the very first page, get straight into it, executive summary. Nice, bold, put it in a box, say, this is the reason that I am looking for this much money. How much you're looking for, that's crucial. Don't just waffle and say, I want to borrow some money. Put a specific amount that you're looking for and list the reasons that you're going to put that money to good use. Why are you seeking money from the bank or the investor or whatever? So executive summary, no more than half a page. Keep it brief. That's so someone can go straight to it and say, right, I get the gist of it. Then you start putting a little bit of words after that. So you will put a brief description of the business. You'll put a description of the director shareholders. At the end of the day, people do business with people. You should have a bio on there of the directors of the business. Who are they? What's their background? What do they do? But then at that point, don't go drifting off into pages and pages of competitor analysis, SWOT analysis on yourself, SWOT analysis on the competition, all this kind of stuff. Keep it simple. That's where people tend to go way off piste on business plans and write far too much. So keep it simple. So yes, do a little bit of narrative on where you are in the marketplace, who your competitors are, locations, just general background of the business. But a lot of the time, the banks, they don't care. All they care about is, can you service the debt? The money they're going to lend to you, can you pay it back? A lot of the blurb on these business plans, forget it. Just keep it simple. So don't start writing chapter and verse, trying to be clever, pie charts, graphs, everything else. Forget it. Forget it. Executive summary, bio of the company, bio of the executives or the directors. What do you want the money for? Right. All the action is in the numbers. Now I would say that as an accountant, but it is. Forget all the blurb. All the action is the numbers, and the bank manager will turn straight to the numbers from reading the executive summary, pretty much. So all the other stuff, forget it. So when I talk about the numbers, what exactly should be in a business plan? Right. You want to put in 3-year forward projection P&L. So profit and loss account, what's it going to be for the next 3 years? Also, 3-year cash flow forecast. So they're the 2 fundamental requirements in the financial bundle within your business plan. So you want to split it out. Typically what you do, because you can do all this electronically, you can do it on Excel, you don't need to print off all these things anymore, you just email them to the bank manager or whoever. So what I would do is I would have a separate tab on Excel, 1 tab per year. So 3 tabs for the P&Ls, 3 tabs for the cash flow forecasts. So we've got P&L year 1, cash flow forecast year 1, P&L year 2, and so on. So you've got 6. Now, do it in column format per month. So we can see what the income and the expenditure is in the P&Ls for 36 separate months, spread across 3 tabs of the Excel spreadsheet. Likewise, for the cash flow, exactly the same, in column format per month. How does the cash move across those 36 months? And again, 1 tab on the Excel per year. That is how you set it out. Now, things to look out for. In your profit and loss account, remember this is the P&L, similar to what you've had in the past for your management information, for your Xero, your QuickBooks, and also your statutory accounts. So you should be fairly familiar with how to put together a P&L, or whoever is helping you do this will be able to put together a P&L. So the important thing is always remember to include the interest on the bank loan that you're taking out. So, and I've seen this so many times where people have just forgot that line. So you are seeking funding from the bank. Let's say you're going to try and raise 100 grand and you've got a term loan over 5 years or 10 years or whatever it is, and you don't put the interest element of that into the P&L. So that's the first thing to look out for. Make sure you get the interest expense of the loan in your 3-year forward P&L projection. So the rest of the P&L, pretty straightforward. It's what you're normally used to. It doesn't really matter if you don't accrue for things like depreciation, but do put in that interest expense. Now, coming on to the 3-year cash flow. Now, the cash flow is a little bit more tricky because the cash flow, of course, everything is on a gross basis. So you've got to account for the sales that come in, including VAT. So the sales, when it comes in, will obviously be gross, and exactly the same with the expenses. They will be gross as well. But then, of course, you have to adjust for the VAT. So on your cash flow forecast, each month, the sales and the expenses are the gross amounts. But then, of course, every 3 months, you have to have a line in there for your VAT. So you have to work out what is the VAT going to be, the net VAT to be paid over to HMRC in every 3 months. Now, again, I've seen that missed off so many times where people have tried to do the cash flows. First of all, they've got them fairly wrong, and what they've done is almost do exactly the same as a P&L, forgetting you have to gross up because, of course, it's the amounts plus VAT that you're both receiving and paying. That's the first thing. But then secondly, even when they've remembered to do that, they haven't then remembered to put a line into the cash flow for payment of the net VAT, the output less the input VAT, every 3 months. So that's crucial. Don't forget that. So in your cash flow statement, your cash flow forecast, work out what the VAT payments will be every quarter. Also, corporation tax. So many times I've seen business plans, cash flow forecast, where's the corporation tax? I mean, that's easy to work out because you've done the P&L, so you know what the profit's going to be. You should be able to just say fairly quickly, 19% of the profit is the corporation tax. Yes, I know there are differences between accounting profit, taxable profit, but by and large, for the purposes of the forecasting, it's reasonable to assume you're just going to say, look, whatever the profit is, 19%, that's the corporation tax. We'll put that into the cash flow tab in the right place, which will be the profit for year 1 corporation tax will appear in year 2's cash flow because we pay corporation tax 9 months after the year end. But it's amazing how many people forget to put in a entry for the corporation tax that's due in a cash flow, and often it's a big chunk. Well, it's 19% of your profits. So for goodness sake, don't forget about the taxes, corporation tax, and the VAT in particular that need to go into your cash flow. And of course, PAYE is another one. Make sure that goes in the PAYE in fact will go in every month. The VAT every 3 months generally, and the corporation tax once a year, but don't miss them off the cash flow forecast. And of course, like I said on the P&L, make sure the interest payable on the bank loan goes in that cash flow forecast also. So that's our core, if you will, core data that the bank or the investor will be interested to see. 3-year projection, P&L and cash flow. Also, what else goes in there? Well, you should put in what we call an opening balance sheet. So you don't need to put balance sheets at the end of each of the 3 years, but what you should do is put an opening balance sheet in. So on day 1. So on the balance sheet, of course, is just a snapshot in time of assets and liabilities of a business. But what you need to do is show the lenders your opening balance sheet, which will include the monies that you've you're going to lend from the bank, so that'll sit as a creditor, as a loan. Now, often the banks will insist on what they call a bit of skin in the game from the directors, so you'll probably put a big chunk of DLA in yourself, director's loan account. So on the opening balance sheet, you want to see the opening, the DLA position of the monies coming in. So on the liability side, you've got monies coming in from the lender or the business angel or the bank, monies coming in from the director, and then the top half of the balance sheet will be what those monies are used for. Now, often it will be to buy, say, another business. That's why you're lending the money. So then you put on the top half of your balance sheet, purchased goodwill, for example. So an opening balance sheet is crucial for lenders to see the opening position, but you don't normally would have to do a balance sheet projection for every other 3 years like you do for the P&L and the cash flow, just a balance sheet on day one. In addition, do put on some historical accounts as well. So part of the business plan, you would include the last year's set of filed statutory accounts. So let's just say you've got a March year end and you have your, let's say it's March 2021 and you've got your statutory accounts filed already. You would include those in your business plan. But also, let's say you're going for funding right now with 9 months, 8 months past the year end. The bank would also want to see up-to-date management accounts. So it shouldn't be too onerous. If you're keeping digital, cloud-based records on Xero or QuickBooks or whatever, all you've got to do is print off the current year-to-date P&L and balance sheet and just save them and attach those to your business plan. But all lenders will insist on seeing those, so do get those ready. So historical accounts, up-to-date management accounts, again historical but up to the recent period, and then it's the projections. But they are crucial. 3 years P&L, 3 years cash flow. So the overview here is, don't get bogged down in all the detail and spend pages and pages reaming off the ins and outs of your sector or your competition and all that. Keep all that fluff to a minimum. No one's really interested. All they care about is, what is the money being used for and will I get my money back? That's what the lenders and the business angels want to know. That will all be in the executive summary, page 1. Get to the point. Why are you raising the money? What is it going to be used for? How are you going to pay it back? And then alert everyone's attentions to the financials, those P&Ls and the cash flows, because they signal affordability. You know, obviously, if you say you put a request in for a £50,000 loan to help with working capital, for example, and in your cash flow forecasts every month for 36 months you're going to be at a £50,000 overdraft, then something's not right. You're obviously not asking for enough. See what I mean? So often in a business plan, at the outset, you may think, well, this is the amount I'm going to go and request from the bank. But it's not until you actually put together a 3-year cash flow forecast that it will show, are you actually asking for the right amount? That's crucial as well, because it's not always set in stone. The amount that you think you need will transpire to be the correct amount, because not until you've done the forecasting will you say, okay, well, I didn't think about that, or what about this? And so the true amount that I need to ask for, page 1 in the exec summary, is a lot higher. So that's just an overview there on how to write a good business plan. If you like this video, please do subscribe right about there, and I'll see you soon.